All right, welcome back to U.S. Farm Report this weekend. Rejoining me, Mike North, as well as John Payne. John, when you look at South America, before we move off of USDA's forecast when it comes to South America, as Mike had said earlier, they did make some revisions to Brazil's corn crop. It sounds like the Safrinha crop is better than what we initially expected, but is that kind of already baked in to traders' expectations?
Well, certainly looks like it. I mean, I think the theme I have here going forward is the USDA is, I don't say they don't matter because their opinion on acres certainly does, but I think the global prices that we're seeing being paid, like we're no longer price makers, we're price takers. And I think, the lack of supply in the short run is putting the markets to levels where the USDA really is just simply trying to explain them away. I don't think, as Mike said, it's not their job to to try to predict. It's try to follow. And I think we've priced in the worst case scenario. I think on the soybean side, and just to finish with Brazil, there's more acreage coming, and that's really where, from the standpoint of forward contracting, any kind of contracting you've done in this kind of market, you've been wrong. Basically, I mean, I think I'm pretty safe to say that. But now, when you look forward at what could come on here, might be some opportunities to try to lock in, very good premium for the bushels, not only this year but a year from now. Because if you catch a good bean crop, I think the story can look a lot different.
Well, USDA lowering its feed usage estimate, Mike, but for both wheat and corn, but increasing ethanol use for corn. But at the same time, when you look at total red meat production, they were looking at higher production on the beef side, lower production on the pork side, and bigger production on the milk side. So when you look at on the dairy side, so when you look at how all of this shakes out, are there any concerns when it comes to how these livestock numbers could play out and the impact on feed use?
Yeah, I think we've obviously had a big run of the bird flu as that's moved through all the different flyways of the United States. 27 million layers now confirmed and having to be destroyed. Reality is that you might see a little bit of a shuffling of the deck here, but I don't know that you're going to necessarily see a growth in feed usage because if we can get rains, moving through the Midwest, a lot of people are going to try to put cattle on grass. They're going to try to keep them off of corn. There's just not enough justification here to be feeding $7.50 to $8 corn if you have grass. So I think USDA trying to maybe get in front of some of that, but all the way around, the step they made today falls in line with really what we should expect given everything that we see. Higher fuel prices are going to attract alternate uses. Ethanol has a nice run there, but at the same time, feeding corn to cattle, if I've got alternates on that side, I'm going to go the other way. So I wouldn't look for a growing balance sheet. I think they're on par with what one should expect out of them with regard to feed.
John, with everything going on around the world, with all the question marks that we have right now, do you think the market does switch its focus and shift its focus to weather, and that really will move prices this year like it can typically do? Or is it just a different situation this year?
Well, it's certainly a different situation this year, but weather matters. I mean, this is really the difficulty of row crop farming, and really the estimates of anything in regards to physical. You can't fake it, and we don't get multiple chances like the guys in the crude oil patch to go over and turn on production, turn off production. So, I think there's logistical problems that are going to snarl us. That'll be different this year. Obviously, the war is a problem in general, and there's one other thing that we really haven't talked about. And I think this is more on the bean side. It's COVID. COVID in China right now is as bad as it was in 2010. I don't think I have to break news on that. Or I'm sorry, 2020 rather. And I think my fear is that when they reopen, they're going to join the party. So, we're doing all this growth and inflation in commodities with China essentially growing at like 5%, which is essentially an inflation for or a recession for them. They start growing at 7% again, the pie's going to shrink real quickly. So this is a tough market to trade, and especially when the weather doesn't cooperate.
Mike, a lot of upside risk, a lot of downside risk, but when you look at it, what do you think is the biggest risk that we watch over the next few weeks?
Well, I go back to one of John's comments earlier, and the uncertainty of everything really presents the greatest risk. We really, from one day to the next, don't know what to expect. There's just no, trend line, if you will, of news and, proceedings. Every day is a shakeup. And so you really can't try to make any rock solid sense of things, and that potential turn at any moment, I think, is the thing that's of greatest concern right now.
Thank you so much for joining us this weekend. Let's take a quick break, and then we'll have much more right here on U.S. Farm Report.
Find farm equipment on Machinery Pete's April 19th online auction. No reserve, no buyer fees. Start bidding now at auctions.machinerypete.com.